What if the most important decision of the last decade was never announced? What if billions of dollars moved before the world understood why? What if the future of power was decided not on a battlefield, but in a server room? And what if the people who saw it first are already positioned for the next economic shift? This is not a story about war. It's not even a story about technology. It's a story about a hidden decision that changed how the world makes decisions, and almost no one noticed. Welcome to Before Money, where we break down the moves that happen before the headlines. If you want to understand where power goes before profit explodes, subscribe now, because once you see this, you won't look at technology the same way again. In 2014, a decision was made behind closed doors. It wasn't announced on television, there were no speeches, no public debate, but that decision quietly redirected billions of dollars. And today, almost no one remembers when it started. At first, it looked like research funding, artificial intelligence, autonomous navigation, machine vision, harmless words, academic words. But money does not move without purpose. And this money was moving fast. Governments weren't the only ones investing. Private funds entered early. Venture capital, defense contractors, data infrastructure firms. They weren't betting on weapons. They were betting on autonomy. Autonomy means something simple. Remove the human, no salary, no hesitation, no fatigue, no emotion. When humans leave the equation, margins expand. History leaves clues. The internet began as a defense experiment. GPS was military before it guided Uber drivers. Microchips were funded by Cold War urgency. Military urgency accelerates innovation. Capital follows acceleration. But this time felt different. This wasn't about faster communication, it was about decision-making itself. Teaching machines to decide, not calculate, not assist. Decide. In labs across the United States, algorithms were being trained to interpret motion, terrain, behavior patterns. Officially, it was advanced automation research. Unofficially, it was something else. A test of trust. Can we trust machines with judgment? The public conversation was about smartphones, apps, social media, streaming wars. Meanwhile, in smaller conference rooms, investment memos carried a different language. Scalability, autonomous platforms, operational independence. Investors asked a quiet question: what happens when systems operate without supervision? The answer wasn't philosophical, it was financial. Autonomous systems do not scale linearly. They scale exponentially. One autonomous unit becomes 10, 10 becomes 1,000. 1,000 becomes infrastructure, and infrastructure becomes dependency. That's when markets lock in, that's when valuations explode. But autonomy required something rare: massive data, compute power, and patience. Only few companies could afford that, and even fewer understood its long-term leverage. Some defense tech startups emerged almost unnoticed. They didn't advertise to consumers, they didn't build apps. They built algorithms that could see, predict, and adapt quietly, systematically. Behind every autonomous system lies a training data set, and behind every data set lies capital. Training intelligence is expensive, but once trained, replication costs almost nothing. That's the hidden multiplier: high upfront cost, near zero marginal expansion. It's the same logic that made software giants unstoppable, but this time, the software wasn't for entertainment. It was for control. Not control of people, control of environments, supply chains, logistics networks, security perimeters, airspace monitoring. The language stayed neutral, but the implications were not. Around 2016, something changed. Funding rounds grew larger, not millions, hundreds of millions. The term dual-use technology became popular. It meant one thing publicly, and something very different privately. Dual use meant a system could serve defense today, an industry tomorrow. A drone navigation algorithm could guide a delivery fleet. A targeting vision system could power warehouse robotics. War accelerated what commerce would later adopt. Capital loves acceleration because speed creates advantage, and advantage creates dominance. Investors weren't funding conflict. They were funding inevitability. Autonomy wasn't just about machines moving alone. It was about machines deciding alone. Route selection, threat assessment, resource allocation, Decision layers were being automated, quietly. And once decisions become automated, human supervision becomes symbolic. You don't need thousands of operators. You need infrastructure, cloud computing, edge processors, sensor networks. Who controls infrastructure? That was the real game. Not the hardware, not even the algorithms, but the servers, the compute, the data pipelines. By 2018, major cloud providers had signed quiet contracts. Not dramatic headlines, but powerful agreements. Long-term compute access, high-security data environments, priority scaling rights. This is where the hidden decision becomes clear. The future wasn't about building smarter weapons. It was about building smarter systems. Systems that could operate without waiting for instructions. And when systems stop waiting, they start predicting. Predicting movement, predicting risk, predicting demand. Prediction is the most valuable product in capitalism. Because if you can predict outcomes, you reduce uncertainty. And when uncertainty drops, risk premiums collapse. Markets reward certainty. This is why autonomous research attracted financial giants. Hedge funds, private equity, strategic capital. They weren't chasing headlines. They were buying position. Autonomous logistics today. Autonomous transport tomorrow. Autonomous manufacturing next. Each layer removes friction. Each layer removes cost. Each layer removes humans from repetitive decisions. And when humans are removed from repetitive decisions, productivity explodes. Margins widen, scale becomes brutal. The company that masters autonomy first wins permanently. But there's something deeper. Autonomy creates dependency. Once systems operate independently, you can't simply turn them off. Economies adapt around them. Airports rely on automation. Ports rely on predictive logistics. Warehouses rely on robotic sorting. Military research simply moved faster. Civilian markets followed, as they always do. Remember this, the internet was once military, GPS was once classified, jet engines were once strategic secrets. Today they're normal. Autonomy is following the same pattern. Phase 1, urgency. Phase 2, refinement. Phase 3, normalization. Phase 4, monetization. We are entering Phase 4. And here's the hidden decision no one talks about. The moment autonomy proved viable, capital stopped treating it as experiment and started treating it as infrastructure. Infrastructure is different. You don't speculate on it. You build economies around it. Electricity, railroads, cloud computing. Autonomous systems are next. When autonomy becomes infrastructure, who owns the backbone? Who owns the code base? Who owns the compute power? That is where wealth concentrates. This is not science fiction, it's balance sheets. Look at investment trends. Defense tech startups valued in billions. AI infrastructure companies scaling at historic speed. The public sees robots, investors see leverage. The public sees drones, investors see recurring contracts, long-term service agreements, software licensing. Autonomous systems require updates, security patches, data retraining, hardware upgrades. Recurring revenue is the holy grail of capital. And here lies the deeper truth. Autonomy isn't about machines replacing soldiers. It's about systems replacing decision layers. Across industries, across governments, across markets. The first sector to fund it aggressively was defense, because urgency removes hesitation. But the real expansion is commercial, supply chains, urban mobility, energy grids. By 2020, the pattern was visible. Autonomous research was no longer experimental. It was strategic. Governments secured supply chains. Corporations secured compute capacity. Investors secured equity. Everyone was positioning. The question shifted. Not, will autonomy work? But who will control it? Because control over autonomous systems means control over efficiency. And efficiency determines dominance. The companies building autonomous infrastructure were not loud. They did not rely on consumer branding. They focused on contracts, long-term agreements, integrated systems, deep partnerships. And then something subtle happened. Artificial intelligence entered the mainstream conversation. Chatbots, generative tools, creative automation. The public saw novelty. Capital saw validation. Years of defense-funded autonomy research had trained models, optimized processors, built scalable frameworks. When consumer AI exploded, the infrastructure already existed. This was the hidden acceleration. Military urgency built the backbone, commercial markets monetized it, and the investors who entered early were already inside. Think about this sequence: autonomous navigation, predictive analytics, machine vision, real-time processing, all perfected under pressure, then adapted for self-driving logistics, automated factories, smart infrastructure, predictive maintenance, efficiency everywhere. But here is the deeper layer. Autonomy reduces labor dependency. When labor dependency decreases, bargaining power shifts. Capital gains leverage. It's not about replacing humans entirely. It's about reducing reliance. Even partial automation shifts cost structures, and cost structures determine market power. The hidden decision years ago wasn't, let's build smarter drones. It was, let's invest in systems that remove human bottlenecks. Human bottlenecks are expensive: training, fatigue, turnover, emotion. Automation doesn't negotiate. It scales. And once scaling begins, network effects compound. The more data autonomous systems collect, the better they perform. The better they perform, the harder they are to compete with. Competition fades. Dominance consolidates. Infrastructure owners become gatekeepers. Gatekeepers become essential. Essential becomes untouchable. This is how wealth concentrates, not through noise, not through headlines, through infrastructure control. Look at history again. Oil pipelines, telecom networks, cloud computing, each created enormous concentration of capital. Autonomy follows the same law. And here's the final layer. When decisions are automated, responsibility becomes abstract. Who is accountable? The engineer? The operator? The shareholder? As systems grow more independent, human oversight becomes thinner, yet dependence grows stronger. Societies begin to rely on systems they barely understand, and markets reward that dependence. Because stability attracts capital, funds expansion. Expansion increases dependence. A reinforcing loop. The hidden decision was never about machines replacing people. It was about redefining decision-making as software. Once decisions become software, they become scalable assets. Scalable assets generate recurring value. Recurring value builds valuation. Valuation builds power. Power shapes policy. By the time the public debates ethics, markets have already priced the future. The capital is deployed. The infrastructure is built. The momentum is irreversible. Every technological revolution follows this pattern. First fear, then adoption, then normalization, then invisibility. We rarely notice the moment of transition. It happens quietly. In contracts, in funding rounds, in server farms expanding at the edge of cities. Autonomy is no longer experimental. It is operational. Across defense, across logistics, across manufacturing, across finance. And the investors who understood early didn't invest in weapons. They invested in autonomy itself. Because autonomy is leverage. Leverage over time, leverage over cost, leverage over scale, and leverage is the foundation of wealth. So what was the hidden decision? It was the recognition that decision-making itself could be industrialized. Once decisions are industrialized, they are optimized. Once optimized, they outperform humans in repetition. And repetition defines modern economies. This is not a story about war. It is not a story about machines. It is a story about incentives. About capital recognizing inevitability before society does. The future will not feel sudden. It will feel gradual, convenient, efficient, normal. And one day autonomy will be as invisible as electricity. Essential, unquestioned, embedded in everything. The investors who moved early understood something simple. Whoever owns the system that makes decisions owns the future flow of value. And that is how billions quietly shifted, not toward conflict, but toward control of infrastructure. Because in the end, the most powerful asset in the world is not a weapon. It is a system that decides. And the hidden decision was to build it first. The world rarely changes with explosions. It changes with decisions, quiet ones, signed in rooms without cameras, funded before the public understands the direction. Autonomy didn't arrive suddenly. It was positioned, financed, scaled, And the people who understood that early didn't chase headlines, they bought infrastructure, because power is no longer just about resources, it's about who controls the systems that make decisions. And once decisions become software, the advantage compounds. The future won't announce itself. It will feel convenient, efficient, normal, until one day you realize the shift already happened. The real question isn't whether automation will expand. It's this: who owns the layer where decisions are made? That's where capital concentrates. That's where leverage multiplies. That's where the next era is being built. This was not a story about machines. It was a story about incentives, and incentives shape the world long before the world notices. If you want to understand where power moves before profit explodes, stay ahead. This is before money, and the real shifts always happen before the headlines.